Go over one of our day trades in the morning that we took and take this as a learning opportunity because I want to make sure you guys understand the trades that I take. And eventually, you guys will be able to recognize these trades over time and be able to identify them for yourself. So yeah, we'll just hop right into it. So you can see here on screen, we have Amazon. This is the one we're going to analyze this morning. You saw in my pre-market notes that this was one of the top watches that I had, and I was looking to take a trade in the morning. So um, I know, and I know I also included like Google and some Netflix as well. They all worked. They all had relatively the same idea. However, for me personally, I can only take one trade or a day trade at a time. It's just for me myself, I get spooked out, and it's just too much for me to handle. But yeah, so we'll hop right into it. You can see, go to a 5 minute and extended. So you can see here from yesterday, uh, we did have a fairly weak close from yesterday here that you can see. And overnight, we did trade down and open up over here. So this was quite a large move to the downside that didn't necessarily align with the market because looking at SPY and the Qs, they did come down a little bit at the open. However, it was not nearly as aggressive as Amazon. So we can see here in the morning, around like 8 o'clock to 9 o'clock and into the open, we were almost bear flagging here. And this was kind of a classic indication of, a strong, overnight move down. And then, that consolidation right before open. There's a lot of selling pressure right at open when a stock is like this. This is kind of similar to like a gap and go play almost, where, a stock will gap up or gap down. And right at the open, you're going to see quite a bit of volatility just because of all the panic and, just from that overnight move, people want to take action. So that's exactly what we got here. And, was expecting more downside. So, this was another trade that you could have taken if you wanted to. There was many ways to play this trade. And one of those could have been, just short the open. However, for me, I preferred to, buy the dip here. And let me explain why. So you can see here, I have this green horizontal box and this horizontal line as well. So for me, more important lines I indicate to be more bold and larger. So you can see that that's the case for this one down here. This was quite a large and important zone. And you're probably wondering, why or how I drew this, right? So let me move out to the 30 minutes so you can see this a little bit better. And we'll go over to regular trading hours. So you can see here, we do have a gap back here from, what is this, the 7th, that actually is unfilled. It's very close to being filled on this candle here, but this is unfilled and was something that I was looking at into today. So this here is a very classic example of a demand zone. It's very, very clean. And, not every support is going to be, determined a demand zone. And some are going to be stronger than others. Some are going to be weaker. Some that you're going to, not really care about, and some of them that are really important. So a really good way to distinguish this is, in identifying this is you can see from the past here, we had a monster move on Amazon and, on a lot of stocks, really. So coming down into here, we continue this trend and we gap up. And over the course of that week, we came down to retest this area that we previously broke. And this is a very clean example of a breakup structure. So a breakup structure really, and it can be to the upside or the downside, but to the upside in this example, you're going to take that local high right here at, what is this, 140, 70-ish. And we did gap up above this. So this, is the breakup structure moving higher. And then we come back down to retest this breakup structure. And since this breakup structure held, and more importantly, not only did it hold, but it made a new high. So it took out this new local high, creating another breakup structure. That makes this area very important, especially in the short term, because we want to make sure we're looking at things from the same perspective. So we're looking at a 30-minute chart. So we don't want to really care about what happens, like 6 months in the future in regard to the zone. We don't really care about that. Since this is a 30-minute chart, we really only care about, the next few days, or the next couple of weeks, just, in perspective time, with the zone. And, this is, what is this? Like only, like 6, 7 days later. So not too far later. And with that weakness that I already explained earlier, we were coming into the zone, and this is where I was expecting a big buy, at least some sort of reaction. To be quite frank and honest, I wasn't expecting like this big of a move. I wasn't expecting a gap fill, to be honest. I was expecting, you can see this target here of 141. And this is where I did scale out partial of my position. Now, I want to zoom in. You can see here on these first few candles, we coming in to test the zone. This candle right here in particular, this is this candle and this candle are very, very important, and I'll tell you why. So this first candle here, this red candle, comes into our zone and almost bounces like perfectly from my level. And this is what every single trader is watching. That's watching Amazon for a bounce play. This level right here, and you can see we did bounce up and we closed that candle a little higher. So this is where a lot of traders are going to enter, and we can enter here too. But this is where a lot of people enter. And then in this next candle here, you can see that we come down and we wick lower. A lot of people, since they enter right here on this previous red candle, they're going to set their stop loss right below this level essentially, because in their minds, if we break below this level at all, the bull thesis is invalidated, right? But that's not the case, because this is the classic example of liquidity. This is liquidity grab, and you've kind of seen me implement that a little bit more in my trading recently, and that's all the liquidity levels that I keep putting on my charts. This is a same example, but just on a much shorter time frame for a day trade. So this liquidity level right here is where a lot of people have their stop losses set. And what market makers want to do is take out your stop. And with that, they, gain liquidity to buy into their position right here on this candle. They consolidate a little more to, try to give you some sort of bear flag almost right here, try to fake you out. However, this is bullish action, and this is them actually accumulating their position right here. And you can see on this breakout from this candle over here on 9:45, this led us all the way up to the gap fill. And the next thing I want to explain is, managing the position and where or how I find my targets. So it's mainly going to be major levels and Fibonacci again. So on this instance, for this gap down, I'm going to use this wick high. So I'll draw from the top, just like that. And you can see this 786 level is my 141 level that I was discussing in pre-market. So you can really use any of these levels that you like. However, if we break above this blue line, this 0.786, you can pretty much put your next level at that top. So it's gonna be this wick high right here. So I did take profits on the way up, especially here, right here on this break of this high as well, and entering the gap fill. Once we broke above this level here, this 141, and this 141.4-ish level from this open, this is where I sent out the message where I said we have room to 142.5. And this level here is where I actually took the rest of my profits. And I didn't hold for the rest of the gap fill because I just didn't think we would get there. But market proved me wrong, and I didn't hold the whole trade, which is fine. I'm not trying to be a perfect trader. I'm not trying to, catch the perfect wick bottom and sell at the perfect wick top. That's just not my strategy. I think we can still all be very, very profitable just by catching, a section of the move, and that's what we should be focusing on, and we shouldn't be greedy. Um, but yeah, that's essentially what, got me into this position. And if we look at SPY as well, you can look on the 5 minute. Sorry, that's cues. Unextended. So yeah, right here. We opened up right around here. Um, so for SPY, um, you can see here, although we did come down in pre-market, at the open itself, we weren't really um, we weren't really selling off. And I'll even zoom in like a 1 minute. So you can see here, we weren't really selling off at all. Um, and we were actually just kind of moving higher actually and consolidating. So, you know, this was very different from what Amazon was looking like because from like 9:30 to 9:40-ish, Amazon was kind of just selling off hard into that demand zone that we pointed out. So, this isn't always going to happen. However, this is just another tool that I like to add to my arsenal where you'll kind of compare the stock that you're interested in versus how the indices are moving. In this case, SPY and QQQ. And, just compare how the two are moving. Um, if you have them moving in the same direction as a trade you're interested in, that gives you, more confluence that, they're trading in the same direction and, it accepts the moves. However, in this case, SPY and indices were trading opposite of Amazon. So, one of these are lying in this case, and that's kind of where I had that extra confidence and, extra layer of protection in this case, where I'm just like, hey, like Amazon is selling off for no reason. It sold off hard, harder than really everything else that we were looking at, and SPY's holding. So, yeah, that's kind of the oops. That's kind of the consolidation there. And you can see from the Amazon chart, right at 9:45 up until like 10 o'clock, that's where we had that big move up. And that's where Amazon filled the gap. So that's where that comes in. But yeah, I hope you guys learned something from this. I'll try to do more of these in the future. And I plan to do a lot of, learning sessions with you guys. I really want you guys to be able to be self-sufficient and understand exactly what I am trading and why I'm trading it so you can kind of see for yourself and start identifying these things as you keep looking at charts, keep trading, and keep working with me. So yeah, just let me know and ping me if you guys have any questions on this, or let me know if you guys enjoyed this, or if there's any questions. But yeah, otherwise I will see you guys for trading tomorrow, and I hope you have a good rest of your evening. So yeah, thank you guys.